A new earnings season just around the corner. And as usual, big banks like JP Morgan Chase, Wells Fargo, and Citigroup will kick off the busy quarter next week. But Wall Street's biggest banks might be facing tighter profit margins following the aftermath of the banking crisis and collapse of Silicon Valley Bank back in March. Now, some analysts are painting a gloomy picture for this quarter, saying Q2 is expected to be the third consecutive quarter of declining S&P 500 earnings. Michele Schneider, MarketGauge.com chief strategist, is still here with us. So, Michele, do you agree with that assessment?
Well, if we look at what had boosted the bank earnings in the past, a lot of it was from their financial side, right? From people being involved in investments and that liquidity that it added to banks, and also being able to borrow money, which right now is much more difficult at these higher interest rates. And even though the housing market has been strong, obviously mortgage applications have been impacted by rising rates. So yeah, at this point, I would think that for this quarter, we will not necessarily see very strong bank earnings. And you mentioned the banking crisis. Some people feel that it was just a little bit too soon in terms of saying crisis over. I mean, what did it last? Like about 4 days. And so the higher the interest rates go, that could put a lot of squeeze, particularly on the commercial real estate and the regional bank side. So I would not have great high expectations at this point.
Do you think there's a theme that emerges this earnings season? It seemed like last earnings season, it was all about how can we say AI in a various amount of ways for companies who had no business saying it, some of them. So, Michele, is there one theme that you believe will emerge this earnings season?
Well, again, I think that you have the advantage is going to be to any of these companies that have managed to survive throughout the first 6 months because of their operating cash flow, and that has given them some level of growth. And, that's why you have to mention AI, right? Because that certainly has happened there. So that's kind of what I would continue to look at. I mean, just take Nike in terms of the consumer space, right? Earnings not great, and Nike stock has been falling. So if that's any kind of foreshadowing, that means that we will see a lot of stress in terms of the earnings. And it's going to be, of course, what they say about future as we get through the rest of the year. And at this point right now, with expectations of 2 more interest rate hikes, and as we talked about already, inflation not necessarily being controlled, at least in the places that affect consumers the worst. I would think that we'll see AI probably still do well, Apple, all these companies, as they continue to compete with one another, but a lot of the other companies not necessarily doing so great.
So can you name more of those companies besides Nike that where you expect to see some stress? Would these be consumer-facing companies, or where are you expecting to see the stress?
Well, we started with banks, so I think the banks can set the tone for sure. And if they do not come in great or worse than expected, right? I mean, the thing with earnings seasons, first of all, is that it's always looking backwards. Mm-hmm. And it's really about what the actual number is versus the expectation. That has the greatest impact to the market. And even that is sometimes a short-term impact. So the longer-term impact generally is what they project going forward, the guidance. And so, let's take some of the high flyers in terms of the consumer space that we've seen in the past, Lululemon being one. I think that those kind of companies could actually start to feel the strain, whereas some of the fast food companies that had stress could actually start to come back a little bit, like a McDonald's, for example. So I think that's really, you have to think what's going to be, if everything we've just talked about, Diane, turns out to be true, if the market has seen a top, if the yields are going to have to be stretched, if we are going to enter more stagflation, potentially recession as we get into 2024, where are these companies, where are people going to spend their money? And they're going to spend the money on more of the staples, which did terribly, right? I mean, Target, of course, it had its own reasons for doing bad outside of being staples, which went down against discretionary, but that could rebound. A company like Walmart could continue to do well, where people are going to go and buy cheapest goods they can get at this point.
Michele, just lastly, while we're on this topic, one of my favorite conversations to kick off the earnings seasons is with Delta's executives because it gives us a sense of where this countercyclical recovery that we've heard about from travel companies is continuing, or what type of consumer profile they're continuing to engage with, particularly across services spending right now in the experience economy. Are you expecting for there to be any slowdown within that?
Well, it's such a good question, Brad, because we actually were in the cruise line stocks and have taken some profits along the way. And I've talked to people who do go on a lot of cruises that said they're booked out for at least the next year. And so, again, at this point, that still could be an outperforming area as people seem to be cutting back in certain things, but yet wanting to get out, wanting to get away, wanting to go on a cruise, wanting to get on a plane. Do I think that that can be impacted? Of course. You know, as we know, when things get sour, if they go sour, it's really hard for anything, particularly in this more sort of discretionary area, to sustain. And then we have this other kind of crazy thing going on, which is the possibility of labor unrest as wages continue to have to increase to keep up. And, you know, you had a strike right now in UPS, and I think it's still out there. And there's been threats of airline strikes. So I think I wouldn't necessarily be all that overly optimistic anywhere when it comes to the equity space, even in the airlines and the cruise lines.
Interesting. So maybe some caution ahead. All right. Michele Schneider, thank you so much. We appreciate you for joining us today. Michele Schneider, marketgauge.com, Chief Strategist.
Thank you.